The phone didn't just ring, it screamed. Monday, January 27th, 2026, 10 o'clock in the morning. On the high-frequency trading floors of Manhattan, at Goldman Sachs, at JP Morgan, at Morgan Stanley, the room is usually a symphony of chaotic noise. Shouting, clicking. The hum of servers processing billions of dollars in milliseconds. But at 10:00 a.m., the noise stopped. Because on the main desk of the foreign exchange division, the direct line lit up. This isn't a client line. This isn't a broker line. This is the line that connects the primary dealers directly to the Federal Reserve Bank of New York. When this line rings, you do not put it on hold. You answer it, and you listen. The voice on the other end was calm. It was bureaucratic. It was terrifying. The official from the Fed's open market trading desk asked one simple question. What is your current bid? And asked for the US dollar against the Japanese yen. To the average person, this sounds like a routine price check. But to the veterans of Wall Street, the men and women who have survived 2008, 2020, and every crash in between, this question stopped their hearts. Because the Fed has screens. They have satellites. They have direct feeds. They know the price down to the fifth decimal point. They do not call to ask for information. They call to send a warning. In the language of central banking, this is called a rate check. It is the geopolitical equivalent of a sniper chambering around. It is the universal signal that the Federal Reserve is done watching the market. They are preparing to enter it. They are preparing to execute a coordinated, violent devaluation of the United States dollar. Most people went about their Friday oblivious. They checked their stocks. They paid their bills. They planned their weekends. They have no idea that the value of the money in their pocket was just marked for death. This is veiled wealth. And today, we are going to expose the secret agreement that has already been made to crash the dollar, wipe out your savings, and save the American empire from bankruptcy. To understand why a simple phone call caused panic among the elite, you have to understand the game being played. The global financial system is not a free market. It is a managed hallucination. It relies on the belief that the US dollar is the unshakable bedrock of value. But right now, that bedrock is cracking. For the last 18 months, the US dollar has been too strong. It has been grinding higher, crushing everything in its path. It has destroyed the Japanese yen. It has humiliated the euro. It has made American exports impossible to sell. But most importantly, a strong dollar is making the United States' $36 trillion debt pile mathematically unpayable. When the Fed calls for a rate check, they are signaling intervention. They are telling the biggest banks in the world, get out of the way. We are coming through. They are warning the primary dealers to stop betting on a strong dollar because the Fed is about to sell dollars by the billions to force the price down. This is not a theory. This is a historical pattern. The last time we saw a signal this specific, this coordinated, and this desperate was not in 2008. It was in 2000. You have to go back 40 years. You have to go back to the Plaza Hotel, September 1985. Because the script they are following today was written 4 decades ago. And if you know how that story ended, you know exactly what is about to happen to your wealth. Let's travel back to 1985. The situation was identical to today. The US dollar was a wrecking ball. It was so strong that American factories were closing because foreigners couldn't afford to buy US goods. Caterpillar, Ford, IBM, they were bleeding cash. Congress was threatening to slap tariffs on Japan and Germany to stop the bleeding. The protectionist rhetoric was deafening, so the elites made a move. The finance ministers of the G5 nations, the US, UK, France, West Germany, and Japan, met in secret at the Plaza Hotel in New York City. In a smoke-filled room, away from the cameras, they signed the Plaza Accord. The agreement was simple. Kill the dollar. They agreed to coordinate their central banks to manipulate the currency market, to sell dollars and buy yen and marks until the US currency collapsed. And it worked. The day after the announcement, the dollar dropped 4%. Over the next 2 years, the dollar lost 50% of its value against the Japanese yen. 50%? Now, pause and think about what that means for a saver. If you were an American holding cash in a bank account from 1985 to 1987, you didn't lose money. The number on your statement stayed the same. But your global purchasing power was cut in half. Imports became expensive. Travel became expensive. The cost of living skyrocketed. But, and this is the key, the stock market boomed. Why? Because when the currency dies, asset prices rise to compensate. The Dow Jones Industrial Average soared, but it was a nominal illusion. You had more dollars, but each dollar bought less. The Plaza Accord saved the US government. It saved the US manufacturing sector. But it sacrificed the American saver. It transferred wealth from the middle class, who hold cash, to the asset owners, who hold stocks and real estate. And now, in 2026, the elites have decided to run the play again. Why now? Why is veiled wealth sounding the alarm today? Because the math has broken. In 1985, the US debt to GDP ratio was 35%. It was manageable. Today, in 2026, the US debt to GDP ratio is 125%. The total sovereign debt is $36 trillion. When interest rates were at zero, this debt didn't matter. It was free money. But the Federal Reserve raised rates to fight inflation. Now, rates are at 5%. Do the math. 5% interest on $36 trillion. The US government is now paying nearly $1.8 trillion per year, just in interest expenses. Let me put that number in perspective. $1.8 trillion is more than the entire Social Security budget. It is more than the entire defense budget. It is more than Medicare. It is the single largest line item in the federal budget. The United States is borrowing money just to pay the interest on the money it already borrowed. This is the textbook definition of a Ponzi scheme. There is no way to tax your way out of this. You could tax every billionaire in America at 100%, and it wouldn't fund the government for 6 months. There is no way to grow your way out of this. The debt is growing faster than the economy. So the architects have reached the terminal phase. They have only 3 options left. Option 1, austerity, cut government spending by 40%, fire millions of federal workers, slash Social Security, defund the military, result, revolution. Riots, political suicide, probability, 0. Option 2, hard default. Tell China, Japan, and the American pension funds, sorry, we aren't paying you back. Result, the global banking system collapses instantly. World War III begins. The US dollar loses its reserve status overnight. Probability, 0. Option 3, soft default. This is the Plaza 2.0 option. You don't refuse to pay the debt. You simply make the debt worth less. You devalue the dollar. If the dollar loses 50% of its value, the real value of that $36 trillion debt is cut in half. You pay back your creditors, but you pay them back in worthless paper. It is a stealth tax on anyone holding dollars, and it is the path of least resistance. The rate check on Friday tells us that option 3 has been chosen. The soft default is live. The rumors reaching our desk at Veiled Wealth indicate that the deal has already been struck. Just like in 1985, the major powers, the US, Europe, and Japan, have agreed to coordinate. Why would Europe and Japan agree to this? Why would they want a weak dollar? Because they are dying too. Japan is facing a currency collapse. The yen has been destroyed by the strong dollar. They need the dollar to fall to save their own economy. Europe is facing deindustrialization. They need a stable exchange rate to survive. It is a global pact of mutual survival. They are going to sacrifice the value of fiat currency to keep the debt system afloat. The plan is to devalue the US dollar by 30 to 50% over the next 18 months. They won't call it a crash. They will call it competitive realignment. They will call it helping American manufacturing. They will call it fighting global imbalances. But make no mistake, it is a robbery. It is a transfer of wealth from your bank account to the US Treasury. So what happens when they pull the trigger? What does Plaza 2.0 look like for you? It creates 2 distinct classes of people, the victims and the victors. First, the victims. The middle-class saver. If you hold your wealth in cash, savings accounts, or long-term bonds, you are the victim. When the dollar crashes, the cost of imported goods skyrockets. Oil is priced in dollars. If the dollar falls, the price of oil goes to $100, $150 per barrel. Gasoline goes up, food goes up, electronics go up, cars go up. Your paycheck stays the same, but it buys 30% less. You're running on a treadmill that just sped up. You work harder, but you get poorer. This is imported inflation. And it is the tax you pay to bail out the government. Second, the victors, the asset owners. If you own real assets, you are the victor. When the currency is debased, the price of scarce assets re-rates higher. Stocks go up in nominal terms. Real estate goes up. But the biggest winners are the owners of hard assets: gold, silver, Bitcoin, commodities. These assets are the inverse of the dollar. When the dollar dies, these assets fly. In the years following the 1985 Plaza Accord, the stock market experienced one of the greatest booms in history. Gold entered a massive bull market. The rich got richer, not because they were smart, but because they owned assets, not paper. The signal has been sent. The red phone is rung. You have a very short window to position yourself before the public realizes what is happening. Most people will wait for the official announcement. By then, it will be too late. The repricing will happen overnight. Here is the Veiled Wealth protocol for the Plaza 2.0 era. Step 1, the hard rotation. You must have exposure to assets that are nobody's liability. Gold is the ultimate shield. Central banks are buying it at record rates because they know the dollar is being sacrificed. Follow the smart money. Bitcoin is the digital liquidity sponge. In a currency debasement scenario, it acts as a fire alarm. It moves faster than anything else. You need both. One is your insurance, the other is your chaotic upside. Step 2, the commodity play. If they are going to crash the dollar, they are going to ignite inflation in commodities, energy, copper, agriculture. These are the raw materials of civilization. They are priced in dollars. Owning the companies that produce these resources, energy producers, miners, farming conglomerates, is the best hedge against the rising cost of living. Turn your liabilities, the gas you buy, into assets, the oil stock you own. Step 3, short the dollar, long the world. When the dollar falls, emerging markets rise. Countries like Brazil, Vietnam, and Indonesia have been strangled by the strong dollar. When the boot is taken off their neck, their economies will sprint. Look for ETFs that target commodity-rich emerging markets. They are historically cheap, and they are about to benefit from the greatest capital rotation of the decade. Step 4, avoid the importers. Audit your portfolio. Do you own retailers that rely on cheap imports from China, Walmart, Target, fast fashion? Their margins are about to be destroyed by a weak dollar. The goods will cost more, and the consumer will have less money. Rotate out of importers. Rotate into exporters. Companies that make things in America and sell them abroad, Boeing, Caterpillar, LNG exporters will benefit. A weak dollar makes their products competitive. The red phone signal was not an accident. It was not a routine check. It was the architects of the financial system racking the slide of the shotgun. They have looked at the $36 trillion debt. They have looked at the interest payments. And they have made the cold, calculated decision to sacrifice the currency to save the system. They're counting on you not paying attention. They're counting on you believing the political theater while they loot the vault. They're counting on you holding cash while they buy gold. Don't let them win. The dollar is entering its final act. The script is written. You can be a spectator or you can be an actor. The choice is yours. This is Veiled Wealth. We decipher the signals. We reveal the pattern. The protocol is active. Prepare accordingly.